Welcome to the Gordon Asset Management Podcast, a show for savers, investors, and entrepreneurs, helping you to stay informed, invest wisely, and achieve the unimaginable. Now, on to the show.
Welcome to another edition of the Gordon Asset Management Podcast. This is your host, Todd Zempel, and today we have a very special guest, Aaron Schumm, or Schumm, depending on where you are in the world, who is CEO and founder of Vestwell. Aaron, welcome to the show.
Thank you. I appreciate being here. I don't know how special of a guest I am, but I do appreciate it.
Well, Aaron, most people find retirement plan record keeping about as interesting as watching paint dry on the wall. Why don't you give our listeners a little background on you, what you were doing before Vestwell, and how you got into the business?
Sure, happy to. And I don't disagree with that sentiment. And I jokingly kind of raise that with folks that we interview, like, why do you want to be in this industry? So long story short, so I've kind of grown up at multiple sides of the table, from large corporate ERISA, starting my career there at Northern Trust, and cut my teeth actually in the financial technology space many years ago, back in the early 2000s, actually building out a wealth platform in the FinTech world and working in that regard. But most relevantly, what we ended up doing was actually falling into the space, over the course, I built another wealth platform before this that sold to a company called Investment out in Chicago, and then started Vestwell. But really, and I can give you some more color on how we actually got here. But at its core, for those of you who are less familiar with record keeping, think of it as the underlying engine to help allocate and manage a 401k, 403b kind of workplace retirement plan. And what actually needs to happen, almost from like an accounting or portfolio accounting aspect. There's a lot of moving pieces that go into that, and it's this kind of complex arcane structure that the world or the United States more so, given the regulatory entities that kind of oversee all of this, has really been held back in many ways, and the attention has been focused. There's been a lot of attention put into the wealth world over the last number of years, probably argue the last 20 years or so, in building out really efficient ways that for people to engage in an entirely different way in wealth. Not the same attention has not been placed in the retirement space, surprisingly so. And I kind of, being a glutton for punishment, decided to take it on and say, listen, but it's time for change, and we can do this. And having grown up in building these things at kind of large scale for very, global enterprise financial institutions and whatnot, understanding the underlying infrastructure and architecture and how these things actually get put together, we decided to take it on and say, hey, we're going to reinvent this and reset the bar and bring this side of the industry to the modern era that other aspects of the financial industry have already kind of been set on a path to do.
That's a pretty tall order. I mean, many of the record keepers out there currently, Fidelity, Great West, Empower Now, et cetera, many of these 401k record keepers were actually started out of asset managers. So they had lots of money behind them. And typically, record keeping in the old days was just an avenue of, it's just a way to sell product to 401k participants. Now, you guys are obviously different. You don't sell product per se, correct?
Correct. Yes. And nor do we want to, right? We do have an RA that we use sparingly for folks that need it, right? But not to push a product. It's more just to offer a service if needed. But so record keeping, when you look at it, right, and just like probably many of your listeners, like, record keeping doesn't matter, right? And people shouldn't think about it and shouldn't have to. And they, in a lot of ways, that the user hasn't had to, but it always had to be there, right? And when it was started through asset managers, largely because they were the big participants in the pension plans and they wanted to manage the assets, right? And as the world has moved into kind of this defined contribution world, we started looking and say, where does this process break down, right? and more so, right? And they're large record keepers. They've been around for many years. They're running on technologies that had been around, as long, if not longer, than a lot of them. And they do what they do well in dealing with all the complexities and edge cases that come with this industry. But when you start to drill down into the industry and look at the broader impact and where the market actually is, right? Years ago, and in our parents' generations and whatnot, people worked at these large, Fortune 100, Fortune 500 companies, and they were there for the course of their careers and so on. And whether it was pension or 401k, that was in place. But as the world's evolved, right, people have gone smaller. Businesses have gone smaller. Obviously the big players will be there, but a lot of the small side of businesses really makes up the majority of companies in the country. And when you dissect that and you start looking and say, okay, 75% of Americans, their American employees, their sole source of invested asset is their workplace retirement fund. It could be a 401k, it could be an IRA, it could be a 403b, whatever it is. But that is where their first touch into the investment side, right? And 98% of businesses are actually in that kind of what we classify as SMB, small, mid-sized businesses. Yet that side of the industry has been largely neglected because the players who provided traditional retirement plan services haven't been able to service that segment of the market at scale where it made sense to them as a business. So if you're a small business company and you wanted to offer a retirement plan to your employees, you could do so, but you were going to pay through the nose either for just the outright plan fees themselves, or they were being offset by these asset management fees that were very expensive because that was the only way to recoup some of the cost of actually servicing these plans. So we kind of took it upon ourselves to dissect this and say, listen, where does this process break down, right? And it's businesses of edge cases that I mentioned, but there's a lot of things that happen like the payroll, right? There's hundreds and hundreds of payroll providers across the country, right? The top guys like the ADPs, the Paychecks, the QuickBooks, whatnot, they own a good chunk of the market, but there are a lot of regional players that happen, and they all have different technologies and different ways to connect. And that process creates a lot of friction, right? If you're a small business and you say, maybe you have an HR person if you're lucky, oftentimes it's like the CEO or the CFO that's processing payroll for the employees. That process has to go very smooth, right? And collecting the payroll, determining who's eligible for the plan, getting that right the first time in a very streamlined way, and then having all the other stuff that comes with 401ks and testing and tax filings, 5500s, and all of that. All that has to go very smoothly for a small business because, frankly, they don't have the attention to place on it like a large corporation would, where they would have a whole committee that would manage this process. So the idea is, hey, it has to be scalable in the small market and has to really fly. And remove the friction and what I would argue that the kind of non-value add components that add incremental expense to servicing these plans, so we could drive the overall cost to serve down and give people a plan in a small business that is priced at or better than any plan you would get working for a large corporation. So that's a lot of how we think about this, and we kind of just get away from the traditional nomenclature. Obviously, legally, you have to incorporate some of it, but you try to just dissect it and say, what actually needs to be in place? How do you adhere to ERISA law? How do you make sure the SEC construct is all compliant? How do you make sure the IRS gets what they need in the Department of Labor? And then the rest of it, just look at it as a white slate and say, how are we going to draw this up the way it should be done today? And that's basically what we do. And we built this, what we call record keeperless record keeper, where it's a logic layer that sits in a construct of a modern architecture that allows us to really bring a workplace retirement plan up to the same level and the same standard that we look at every other aspect of our financial life, whether it be on the wealth side or your banking or anything else that you do, outside of your workplace. So we're really trying to bring these worlds together and make sure that the friction points are alleviated, so people can have the best solution possible at a fraction of the price point and create an experience that you expect in every other aspect of your life.
That's great. And can you give us a few specific examples of what exactly Vestwell is doing differently to reduce some of that friction?
Yeah, I'll give you one on the payroll side, right? Because it's a one that's often a big hurdle. So we built out a patent pending payroll and eligibility engine. And you're like, okay, well, who cares, right? Payroll. So this is the point in which your employees are going to get paid, right? Let's call it, say it's a semi-monthly pay schedule. And that payroll, you're going to say, I have X dollars that I can invest in a retirement plan, whether it's 401k, an IRA or whatnot. That gets deducted out of your paycheck, right, before it goes to your bank account. But then once it gets deducted out of your paycheck, it has to go somewhere, and it has to be looked at as like, is this eligible? Is this employee eligible to participate in this plan? Do they meet the right criteria, and all the other things that happen after from the investment side? So usually what happens is a very manual process. Someone's grabbing a file, someone's bringing it over, and then it gets spit out in a traditional record keeper, right? It's like a 4 to 7 day process of, someone's birth date was wrong, or the HR person fat fingered a social security number. And this happens all the time. It's kind of shocking. And what happens then, it gets rejected, and the HR person says, I see a line, line 42 has an error, and I got to go figure out what this error is. And they don't have to be, they're being forced to be specialists in this regard, and they don't need to be. So it about 30 to 40% of the time, industry-wise, that process goes through cleanly. No one has to actually touch it. But the other 60, 70% of the time, someone actually has to have some intervention, which delays the process, which keeps you out of the market, which creates these loss gain scenarios and all the catch-up contributions and that may need to be had, or additional loss gain deposits to make up for that delta. What we do is automate that stuff and find the easiest way to build connectivity. Now, payroll companies are different, so they're not all, you can't work with them all the same. But we built out 5 different ways to capture payroll and process it. And our goal, what we hold ourselves to, and kind of our one of our OKRs that we're managing towards, is we want 95% of payroll every time paychecks get processed. We want 95% of that to go through cleanly and straight through manner where no one has to touch it. Well, right now we're at 93%, right? So we're still more than double, triple the industry average. But we want that where it goes through smooth, right? And if you do that, then you're helping. We can process all this stuff in microseconds. So now a 4-day process just got distilled down to microseconds, and creating that real time experience that we all kind of expect. There's still things with ACH that are a bit arcane that we can't really change, right? And the delays there, but we're slowly working towards that and pushing the kind of the edge on how this stuff can really change over to the modern world.
Yeah, that's great. Thanks for that. And so philosophically, are you requiring plan sponsors to sort of live within your world in terms of plan document and adoption agreement? Or have you built this technology to be flexible around outside providers and all the potential different provisions that could be permitted in the adoption agreement and plan document?
Yeah, both. So we do both. It depends on who we work with. So most people will never hear of Vestwell, right? It's always white label. We're the engine inside a lot of household names that are global brands that are out there, but they don't know that they're actually logging in and using us, or information is being processed through us, right? We're just the underlying infrastructure engine that makes this stuff really work. So plan doc wise, we have a couple ways to do it. We have partnered with F2 William and their Wolters Kluwer company, and we use F2 William's kind of volume submitter plan docs for the majority of our business. But we also have providers that have their own and they want to use that, so we can just plug those in. To us, it doesn't matter, right? We're not going to tell people how to run their business with who we work with, and I should actually explain that. So we work through 2 major channels. The vast majority of the folks we work with are through the financial institution side of things. So think of insurance companies, asset managers, advisory groups through RIAs, broker dealers, and so on, right? That's 93% of retirement plans in this country have an advisor attached to them. So we're heavily focused there. And my career and a lot of the team, we have been spent working and building platforms for financial advisors. So we put that kind of front and center. But we also work a lot with payroll providers, and they're not mutually exclusive. But there's a lot of payroll providers who are out there and say, "Hey, I want to go, take business from one of their competitors, and I need a retirement plan offering that I can call mine as part of that value add service to them." So we're working with them in that regard. So we'll put those pieces in place, and then basically roll it out to the market So no one will really know it's us. But if someone says, hey, I have a large book of business and I already have the plan docs and I don't want to change them, we can just plug those in and map them into the platform.
Got it. Now, very broadly, if we have listeners that are looking to potentially start a retirement plan or looking to maybe make a change in their record keeper, what would you say are the top things that Vestwell does differently or that people should consider when looking for a new record keeper?
Yeah, I mean the biggest thing is know yourself, your business, and your employees. Right, ERISA was designed for the benefit of employees and to help them, making sure that they're protected and given the best solution possible. But you also have to look at kind of why you're doing things. Right, is this is it a small practice? It's called a legal group where there's highly compensated individuals. There's profit sharing, cash balance. Those sort of structures, right? And kind of understanding how that works and flows into the equation. The other side of it is, obviously expense is a big one, right? Making sure, the top three thing, we do this annual study every year, and it's expense, it's experience, and it's client service. And people have different weightings as to how they would prioritize those between, a business plan sponsor and a financial advisor. But those top three things still remain in the top three. So kind of knowing, what is your appetite for this? Who's going to pay for it? Is the company going to pay for it? Is the employee going to pay for it? And all of those things, right, need to be flexible. We take an approach to where we're not a one size fits all shop, right? Because I look at the world and our team looks at the world and say it's not a one size fits all world. We're not going to create a box and try to shove everyone into it because that's not the right thing to do, right? But you can build it with flexibility and run it at scale in a small market. So our goal is to say, listen, every person that uses this platform, regardless of who it is, where you sit in the ecosystem, whether it's on the services side, the payroll side, the company or the employee side, everyone has to be better off than they were without us, right? And that comes down to creating, a highly efficient architecture that allows us to drive the cost to serve down, create a better user experience than anyone, and then making sure people get the service they need. Now, there's a lot of moving parts. It's a big ship to lift, and unfortunately, we can't build it all overnight. But we've done a pretty good, strategic kind of. We've taken a pretty good strategic approach as to what we're going to focus on, and then continue to get better and improve on that. But those are kind of the broad things, just making sure that you're finding the right thing based on design and experience and whatnot, that's right for you. And are you going to get what you need, right? If I'm a small business and I go to a large provider because they have a cachet name and that cachet name is not comfortable working with small businesses, I'm going to get kind of, boxed into a corner and not get what I actually need, right? So some people are like, hey, I don't want to name names per se, but they're like, hey, I want to go work with so-and-so because I like their name. And they're like, yeah, but they don't actually like working with you, right? And then they may do it, but it doesn't necessarily fit. So, you got to consider those things.
Yeah, and so just a quick commercial. So the 2020 retirement trends report that you guys have on your website right now, vestwell.com, was great. It's a great summary of just what people are thinking, what plan sponsors and advisors are thinking, and what they find important. So if anybody's interested, I urge you to go to vestwell.com and check that out. I think it was a great report. Aaron, looking across the horizon, there's a lot of talk about PEPs and MEPs right now and how that may potentially help folks to scale. Where do you see the record keeper industry headed?
Yeah, it's a good question. It's always the topic of the day nowadays. But so I'll give you my personal view, right? And then I'll tell you what we're going to do. So my personal view is great that the attention is being placed on it from an industry perspective, and that people are trying to find better solutions. I think it's a very short-sighted solution, and ultimately, right? The larger traditional players are going to look at PEPs and MEPs and say, this is our way to service people at a cheaper price point, right? Good on the surface, but when you actually, going back to our last point, if you're looking at what is right for my business and my employees, that may ultimately not be the right thing. So kind of creates a box that people are shoved into, just to create additional efficiencies from the provider perspective. And the reason why they need those additional efficiencies is because they're held back by legacy technology, right? And they can't actually do what they want to do. And listen, we worked with legacy technology providers, right? And when we started this business, we worked with a Reliance partner because we couldn't build a record keeper out of the gate, because frankly we would have ran out of cash, right, and failed as a business. So we learned from that and said, okay, where are the efficiencies, and we can build this, better, faster, cheaper, and do it in the right construct in a modern way, right? Those other large incumbents don't necessarily always have that opportunity, right? So this is a way for them to kind of band-aid that process. That being said, we will offer PEPs and MEPs because we work with some institutions that want to just, check a box and say they have it out there. And that's fine, right? And frankly, our system has been designed from day one to kind of basically do a PEP structure anyway, right? The 5500 process is slightly different, but it's ultimately the same thing. So like I said, before, our job is not to tell people how to run their business. Our job is to enable it in the best way humanly possible. And that's where we focus on. And I say if that's how you want to build your business, great, we'll power it.
Right. It's funny. We had Ted Benna on the podcast a couple of weeks ago, and we asked him the same question, and his answer was actually pretty close to your answer. So you're both kind of thinking along the same lines. And really, we think the same thing. I mean, with technology, it almost seems like the need for PEPs and MEPs is greatly diminished as technology gets better and better.
And just if I can add one point to that. So I've said this to someone that asked us. I said, why would you want to offer a MEP when you can offer a custom plan to anyone at a cheaper price point than you'll ever be able to offer a MEP? And then have the opportunity to actually grow with them, change the plan design, because your needs, when you're a 5-person company are different than when you're 50 and a 500-person company, right? And if you're growing, you're going to have to change, right? So why go into a MEP where you're going to have to, convert back out of it and then find something else where, so that's our philosophy. But again, we'll definitely offer MEPs for folks that need it.
Yeah. So Aaron, any other closing thoughts before we wrap things up today?
No, I mean, the only thing I'll say is back to your original comment, like as boring as, quote unquote, retirement or record keeping is, it is incredibly exciting right now. It is. I've never seen this much attention. I came up with the idea to build this company back in 2010, when we were about 3 years into my last company. We were building on the wealth side. Said, hey, we should go build this and like marry retirement and wealth. And our investors like, that's great, but we have enough to do. Get back to work, focus on wealth, right? So fast forward, if I had done this then, it probably would have been a little premature. But just the not only from just the insular industry that we kind of live in, but you folks on Capitol Hill and whatnot, the attention being put on this space right now is awesome. And it may not all be perfect right now with what people want to do and how they want to do it, but the fact that there's the attention being applied to it and a lot of smart people floating around this country trying to solve problems, things are going to get better. And we like to be at the forefront of that and what we're building and how we think about it, right? And our goal is ultimately to be the solution that powers any workplace and savings program, right? Whatever that may be, IRA, HSA, 529, 401k, 403b, emergency savings, all of those things are basically, to us from an architecture perspective, the exact same. But the logic is different, right? So being able to have the adoption that we're having and the traction, which is kind of astounding right now, it's fun to see it because people are now looking and say, this actually can be changed, right? It's not just going to be like, well, this is what you get because this is what we have. People are like really pushing themselves right now to do things for the better. So I think it's a testament to kind of everyone in the industry and the focus that's being put there.
Yeah, and I couldn't agree with you more. In our business as well, on the advisory side, technology is finally getting to a point where you can offer custom at a low and reasonable cost. And so this is exciting for me. I think a lot of our listeners know I used to work in record keeping. I used to be a TPA. Now work on the advisory side. So I've kind of seen it from all angles. But it is indeed an exciting time to be in the business. So, Aaron, I appreciate your time today, and hopefully, as things progress, you're welcome to come back on and share your thoughts about what's going on in the industry.
Thank you, Todd. Really appreciate it. Thank you for your time as well.
All right. Thanks, Aaron. Have a great one.
The information in this podcast is presented for educational and entertainment purposes only and is subject to change without notice. Opinions expressed are those of the participants and don't necessarily reflect those of Gordon Asset Management, LLC, its producers, hosts, or guests. Information presented should not be construed as tax, legal, or investment advice, or a recommendation or solicitation for the sale of any product or strategy. Listeners are encouraged to seek advice from qualified professionals to determine whether any information presented may be suitable for their specific situation. Investments involve risks. Neither Gordon Asset Management, LLC, nor its podcast participants shall be liable for losses resulting from decisions based on information or viewpoints presented on this podcast.